Welcome back to Trading Rolly. Looking at the Bitcoin chart, we got the bounce we were looking for. We talked about in Friday's video. Now we have a CME gap below, so we'll take a look at the chart, do some TA, also have some headlines, some good Fidelity news, as well as Raoul putting in the good word for Ethereum. Also want to do a side-by-side breakdown of the dollar index and Bitcoin. Let's see how they are compared side by side. So go ahead, hit that like, leave a comment. Let me know if there's anything you would like to see. Let me know how your week's going. Are you excited for this week coming up? I don't know. Leave anything. Subscribe. Of course, subscribe and tick that bell for notifications. Remember, these are my own ideas and opinions on the market, so please do your own research and trade at your own risk. I am not your financial advisor. All right, roll. Let's look at the market real quick. Bitcoin up 1.6% last 24 hours. Ethereum up 3%. Litecoin 6%. 5% for Chainlink. Pretty much all in the green here. So we got the bounce. We'll get to the charts momentarily. Looking at the crypto fear and greed index, extreme greed back to the 95. We are ready to pump. All right, pump it up. Fidelity custody business around Bitcoin, incredibly successful. So just good news to see that Fidelity is having a successful, good time with their Bitcoin business. And we're going to see this more and more from more financial institutions that are supporting Bitcoin, and they're seeing all this demand running in. I'm sure they're making money off the top somehow. So this is good to see that there's actual excitement and interest, and the institutions basically backing that up. Moving on, Raoul. So Raoul, made a splash this year, going heavy into Bitcoin. He's been, big on Twitter about it all. He's a former Goldman Sachs hedge fund manager. But I was reading this. I posted it on my Twitter at Trading Rolly. You can read it for yourself if you like. But he was basically saying that people in crypto underestimate the multi-trillion-dollar potential that could go into Bitcoin and altcoins. And his argument is it's not going to just be Bitcoin and Bitcoin only, that this money is going to funnel into many of the other coins. And I believe that too. I don't think all coins will, succeed. We'll see many come and go based on hype, but a lot will. And the ones that last, it's kind of like the dot-com boom, 99, 2000. Anything with an internet company was going up. The stock market was going up if you were into the internet companies. And then they crashed hard. But after they crashed, the companies that survived that crash, like Google, have become very, very dominant. And we could say a lot of shit coins were destroyed and may never ever recover from the 2018-2019 bear market. So we could see something, the coins that have lasted through the major bear markets are the ones that may have the longevity for this marathon we're playing. So but specifically Ethereum here got a big shout out. Okay, I even had to purchase a little more Ethereum myself after reading this, because it's true. He's basically saying the size of the global custody system is 23 trillion. That will accrue to Bitcoin and more like. So he's comparing which cryptocurrencies will be able to take on that same type of characteristic, I would say. So global custody systems will move into Bitcoin and Ethereum. Then he says the settlement layers is over a 4 quadrillion per year market, and BTC and ETH and other blockchains will benefit from this as well. The derivative layer is another 1.2 quadrillion, not trillions, quadrillions. It feels more like ETH and BTC. He's comparing this to the total equities traded per year globally is around 70 trillion. Tokens like Ethereum will fulfill that type of characteristic. The total size of the FX market for trading different currencies is 1.7 quadrillion. And again, BTC, ETH, XRP can all benefit from this. He's saying total global debt market is 260 trillion, and ETH will be able to take on some of that debt. So whether they tokenize their debt, who knows? You can read more into it. But he keeps saying ETH, ETH, ETH. And we've also seen with Grayscale, there's over 100% premium on the Grayscale Ethereum that you can buy traditionally through this, stock market. Institutions can purchase that. So you have a huge interest in Ethereum, and Ethereum's market cap is only at 66 billion. Bitcoin's at 353 billion. So almost 6x to get to Bitcoin current market cap. So there's a lot of potential for Ethereum. All right, I'm sure everyone already knew that, but just to see that this former hedge fund manager that has been hyping Bitcoin all year is now putting in pretty good word for Ethereum, and you're just seeing that interest growing with the Grayscale, and now you have the Bitwise index we talked about, which is weighted by market cap. So Ethereum's going to be the second largest asset in that index. Interesting to see. All right, let's keep it moving. Okay, so I want to compare the dollar index because we know that commodities like gold perform better when the dollar is falling in value. So the safe haven play would be gold or oil or, typically bonds if they have a good interest. When the dollar is falling, those increase in value. So they were saying, what if the dollar recovers? Because with the vaccine news, maybe the dollar could recover a little bit. And they're saying Bitcoin is still surging despite the recovery in the dollar. And we'll look at the chart there because I don't know how much of a recovery you could really say has happened. They might be jumping the gun. But we need to look at this in case there is a recovery because we could see a bounce just based on the chart alone. However, with the stimulus, you're seeing the dollar value decline. When you start printing more money, it's creating more inflation and the value of the dollar going down. So typically that would be good for gold, oil, and Bitcoin. So let's compare them side by side and just see the correlation. All right. Hit that like for me. Hit that like. All right, let's start back here. December 2013 was a local all-time high. Right around that point, so this on the left is the Bitcoin weekly chart. On my right is the US dollar index weekly chart as well. So this is December 2013. What happened when Bitcoin hit its all-time high and trailed downwards? You can see the pump, the value of the dollar rising there. So definitely inversely correlated. And then once we bottomed out was actually basically the top here. You did chop sideways, and then after reaching your final top, you did have a collapse. That was December 2016. That was the top there. What happened December 2016? Bitcoin approached the all-time high. In fact, it broke through there, and for the next year, it had that massive 2017 rally. What happened at the top here? December 2017, the price of the dollar index reversed and rose higher as Bitcoin fell. So far, I'm seeing a pretty good inverse correlation, especially this time, and this time. Here, it was mostly sideways for the dollar index, and Bitcoin was continuing to rise. All right, because there's a lot going on with Bitcoin. We can compare Bitcoin to the gold charts. We can compare it to the stock market. We can compare it to the dollar index. And you can find similarities at some points, and then other times it's not. So I'm trying to, we're doing some research here. And so far, you can see an inverse correlation. And then here, during this sideways choppy action, you're just seeing the price rise. This is I forget exactly where, but you had your halving event around this time as well. So maybe as the dollar index was chopping sideways, the supply and demand fundamentals that Bitcoin has with its finite limited supply and having the halving. So because of the demand increasing and the supply shrinking, you saw the price going up as the dollar index was chopping sideways. When the dollar index is making a large move to the upside, Bitcoin made a large move to the downside, and inversely, when it made a large move to the downside, Bitcoin made a large move. So as long as the dollar index can hold value, I think Bitcoin continued to climb. If the dollar index has a major rally, then perhaps that lines up with a pullback, a large pullback, over the course of several months possibly. Because this bottom here on Bitcoin's chart, March 2020, was also the top on the dollar index. So again, inversely correlated. So what we would hope for, if you are heavily invested in Bitcoin and not heavily holding cash, you would hope that the dollar index continues to fall or at least goes sideways. All right. Looking at the dollar index, you can see if you zoom out to the weekly chart, you had this resistance level here. It was flipped as support. We're currently around $90.80. This level is at 88 cents. So there's still room to come down to the downside. If the dollar index for some reason lost that support and came much further down, say down to like 80, that would line up with the large rally in Bitcoin. I would most likely be certain, most probable. That would be my bet, though. I think so, okay? Now, if this has a large rally, like a strong rally up, that could be bad for Bitcoin in the midterm. If we just chop around, Bitcoin potentially can do its own thing. All right. Let's go to the Bitcoin chart. We have a weekly candle close. We have the CME opened up. We can follow up from Friday. Looking at the CME chart here, going down to, let's look at the 4 hour. We do have that gap below. And, the CME thing, they most often do get filled, whether it happens today, this week, or down the road. They do have a tendency to fill. I used to, probably this time last year, I was like playing those gaps aggressively on margin. Now, I don't prescribe to it as much, and it's been in my benefit to kind of ignore it. I mean, it's in the back of my mind, but I'm not going to just because there's a gap, I'm not going short here. Bitcoin's in an uptrend. It's still kind of risky to short something that is so bullish as Bitcoin. We could be, putting in a distribution top for sure, possibly, but still, I mean, it hasn't been proven that we're bearish. We're still above all of the key moving averages you'll see shortly. So we're still in a macro uptrend. I'm not just going to short just because of a gap, but just be aware there is a gap here. Some people say that this was the gap that got filled. Technically, I feel like the gap should start down here. That's where the last candle was. So, not everyone agrees. Some people say that the gap has to be seen on a daily chart. 4 hour gaps don't count. On a daily, you do see the gap there. Here, this one looks kind of ugly. So, I mean, technically, is the gap here? You get my point here? People just argue whatever they want to argue. All right. So was this gap filled or not? I don't know. I can't even tell you if the gap was filled or not. Some say it was. Some could say it wasn't. All right. But gap nonetheless. Moving on. Gap talk. Weekly. Let's just go to this over here. All right. So We put in a weekly candle close. Take a look at that. Big doji, another doji here. So, you sold down and bounced, a nice bounce. Your stochastic didn't confirm a cross down. It's not an aggressive cross down like that. We're still hovering up here. In a bull rally, bull market, you can stay in this upper bullish zone for a while. So, I don't have any clear-cut bullish indicator there yet, besides the fact, RSI, yes, it is overbought, but you can see that it can just like bounce between overbought and neutral. With each time, though, that it came back down to neutral, you did have a 30% drop, all right? So we do have to watch out for that. Throwing on the moving averages, above all moving averages, all weekly moving averages, well above the 10 simple, support down at 16,405. Your yellow 21 EMA is critical to stay above, or at least close the candle above, is 14,460. If we come back down to that level, I would expect to see a bounce. If we closed a weekly below the yellow 21 EMA, it could be more of a prolonged setback. Maybe you have your blue 50 simple coming up to 10,677. But, with that blue 50 simple all the way at 10,677, and we had a clear resistance level broken, flipped as support, I don't think we'll go below 10K. It's always possible, but I would lean towards not going beneath 10K. All right, one day at a time. But otherwise, we're still struggling at that, all-time high area, which was expected. But we haven't been rejected. We haven't had a severe rejection. We could have been rejected right here on the first week, but we're now, 4 weeks in, a whole month, fighting with this level. Still bullish, still above 19,000. Looks good to me. Let's look at the daily, see if we see anything. Put on my volume again. We will need a lot of volume to break through that 20K level. So I would like to see a big candle, big volume candle like that possibly. You're looking at a fractal here. We talked about this Friday. You did get the bounce. So this right here looks a lot like this. You had a rally, topped out, down, back up, higher low. So low, higher low, rally, sideways chop. Looks pretty similar. So we could continue to go sideways for some time, or maybe we get the volume next week. So the Pfizer news could be really good news for the stock market, and Bitcoin doesn't move every day with the stock market, but I feel like what's good for the stock market can be also what's good for Bitcoin. They're both risk-on assets. So the Pfizer news could drive prices higher. In fact, let's just see futures. The futures on the stocks open. Let's see what they're doing. So they're bullish. They're putting in green candles for now. So maybe Bitcoin will follow that. Excuse me. Daily moving averages, back above all moving averages. Good to see. Your pink 10 simple support, 18,793. Yellow 21 EMA, 18,451. Okay. Let me go to the stochastic. Stochastic looking to cross up. Cross-ups have been good signals in this rally. So I know the 4-hour had that cross-up. Is what gave us the confidence on that bounce there, and now possibly getting that daily. And I reiterate, you need to break this downtrend on the daily RSI to confirm that as well. Okay, let's go to the 4-hour. Your 4-hour stoke crossed down though, okay? But it crossed down here, and now we're hitting support on your moving averages. So pink 10 simple support, 19,000. Yellow 21 EMA crossing above the 50 simple. A bullish cross above 18,759. Let's see if we can get a bounce here or not. But your stoke is crossed down. Let me just peek at the 1 hour, just to peek. Okay, so still coming down on the 1 hour. Looking for that cross up on the 1 hour possibly, whether it comes here or maybe we have one more dip down and then bounce higher. Looking for that cross, and so first on the 1 hour, and then you could possibly get it here as well. Okay, so maybe you get a bounce there, but you are at a resistance level with this previous price action. You know, you could just draw a rectangle basically. Let me see, a little rectangle of resistance right in this whole area. Okay, so you'll have to break this high here with volume. A break above without volume could be a bull trap or a fake out. So you want to see the volume to follow through with that. Anything left on Bitcoin? 4 hour, we were watching this on Friday. We were watching that bullish divergence where the price, you had a low, a lower low, but on RSI it was a low, and then a higher low. And we also closed above that downtrend and got a nice rally back to, you know, this trading range up here. So looks good. Makes sense that we're pausing where we previously struggled with. And we'll just have to see, you know, do we get that volume tonight, or do we need to wait for Wall Street to open tomorrow morning to get some real volume, maybe some institutional players in, maybe some headlines, some bullish news, okay? But looks good. It's a lot better than us dumping, right? Holding the line.